Hi, guys. I'm Phil Town from Rule 1 Investing, and today I want to talk to you about some of the most common lies your financial advisors tell you that you should watch out for. Look, for a lot of people who are just getting into investing, it's more than a little intimidating. So a lot of people just decide the heck with it and they turn to financial advisors. In fact, one of the biggest misconceptions people have about investing is they think they have to work with a financial advisor in order to be successful, right? You just can't do this myself, whatever. Now, I hate to break it to you, but oftentimes financial advisors aren't helping you out as much as you may think they are. And they often, maybe ever, don't have your best interest in mind compared to their best interest in mind. So today, I want to go over some of the most common, I hate to say the word, it's a tough word, but it is what it is. These are the most common lies your financial advisors will tell you that you should watch out for. All right, so here we go. Lie number 1, the time to act is right now. Now, this is so common. It's just funny. It's like walking into a car dealer and asking him if you should buy a car now or wait till next year. They want you to invest now. They want your money to be in their hands. They don't want it in cash because they don't get paid when you have cash. They only get paid when you're either have put the money into something like the market, or they are buying stuff for you and getting commission. So the biggest, most consistent investment returns, honestly, they don't come from acting right now, today, every day, right? They come from sitting patiently and just waiting, not just acting every week on every tip and massive urgency. You got to do it now. Now, it doesn't mean there isn't a time when you have to do it now. There is. But most of the time, you should be doing nothing, right? We shouldn't be trying to time the market. It just makes certain, if you're patient, that you aren't paying more for a good company than you really should. It means waiting for companies you want to own to go on sale. So the time to act right now is almost always wrong. Almost always wrong. Isn't that amazing? And yet that's what everybody tells you to do. And I'm calling this a lie. In all fairness, these guys are trained in a view of the market called efficient market theory. This is what's taught at the Ivy League schools. It's starting to fall apart now. There's been about 20 years of research saying it's absolute utter crap. But efficient market theory essentially tells advisors, and by the way, to get an advisor license, you have to take a test with the SEC that shows that you know and understand efficient market theory because the SEC basically believes in it. And what that means is that efficient market theory says that the value of all companies is the same as their price. That is, that the market is so full of information that every stock is immediately bid up or down, and to where it's a 50-50 bet whether it's going to go up or down tomorrow. And nobody knows because it's been, all of the information is all put into it all at once. All right. And what this means is that no stock ever goes on sale. And therefore, if you believed that, you wouldn't think you were lying to say you should put your money in now, because there is no wonderful time to put your money in the market and there's no wonderful time to take it out. Not according to efficient market theory. Every time is the right time. So I understand where they're coming from, but it is also utter, complete BS. There, in fact, are absolutely fabulous times to be putting your money in the market, but they're rare. Most of the time, you shouldn't. All right, lie number 2. You can't beat the market. We're going to diversify your portfolio across all sorts of things with this plan that we have, which is going to be diversification, more diversification, some other diversification, and yet again, additional diversification. Now, by the way, many of the brokers are not financial advisors, they're brokers, and they're getting paid every time they diversify you into something, right? They move you into something, they get paid on the way out, they get paid on the way in. And if they're just a financial advisor taking 1% of your capital under management, they're doing it because that's how you do it in an efficient market theory world. That's how you do it. There's no reason to think that you should do anything other than diversify massively because nobody can get a bargain. So therefore, we're just going to buy everything. And that'll offset the ups and downs of the market. The problem is it's complete BS. I mean, they're still pitching it that guys like Warren Buffett, Charlie Munger, and another 100 people I could name can't beat the market when you have guys like Li Lu out there who escapes out of China after Tiananmen Square, comes to Columbia University, goes to watch a lecture thinking that there's a buffet so he can eat for free. And it turns out he's watching Warren Buffett, and Buffett convinces him that he should be a fund manager. He says, I want to be that guy. I want to do that. And he becomes a fund manager. He's probably the best fund manager in the world right now. He's compounded money at 30% a year. 30% a year. Now that crushes the stock market. Warren Buffett has a 20% plus track record per year, compounded for over 60 years. Charlie Munger, same thing. So it's not that these guys are geniuses so much. I mean, you could do the same thing if you do what they do. It's just that they do it with billions of dollars, which is hard, okay? But doing it with a few million, Warren once said, if I only had a few $1 million to invest, I could crush the market. I think I'd be doing 50% a year in this market. So the idea that you can't beat the market is nonsense being taught to you by people who don't even want to try. They just want to diversify. They're sales guys. They don't know how to beat the market. So let's just go for a simple plan here maybe. Because the people who do beat the market do have a simple plan. It's a simple, proven path that you go down with discipline and patience once you learn how to do it. And you too can have the same kind of rewards. It's not rocket science. It's not a high IQ. It's just learning how to properly invest and then applying it with discipline and patience. You can do this. Don't fall for the lie that you can't beat the market. All right, lie number 3. I can beat the market. Most financial advisors, even with the guys who are doing these big wealth portfolios for, companies that are the biggest companies, JP Morgan, Morgan Stanley, Oppenheimer, their top guys are salespeople. They're not people who can pick a stock properly. They don't know anything about it. They've spent all of their time looking for more clients. They're prospecting to find more assets to get under their allocation. And that is what makes them very wealthy. They don't get wealthy making their clients wealthy. They get wealthy by adding more clients. So they don't use any kind of a proven plan like a Buffett or a Munger, like a Rule 1 type investor with discipline and patience. They don't do that. They're not looking out that far. What they're going to do is they are going to absolutely focus on diversification. And if you wanted to know some really good companies, they will be scrambling in the hours before you show up in their office to produce these lovely 4-color documents that are being fed to them by their research department about what company you should be buying. And it isn't much different than just, a guy who knows the name of the thing and can barely pronounce it, and then they're just going to have memorized a kind of a script about pitching this company to you. They don't have a clue about how to do that. They're not even incentivized to beat the market. Like I said, they're just incentivized to raise capital. So the idea that you're going to give your money to a guy who can beat the market, the chances are that just isn't true. It just isn't true. Now, are there some out there? Sure, absolutely. But they're not interested in your money. I mean, why would they be? If they can crush the market, people are going to be beating a path to their door from pension funds, insurance funds, banking funds. They're not going to take your $30,000, much less your, $500. I mean, come on, you guys, get a grip. If they can beat the market, I don't know, once Warren Buffett said, look, if you can prove you can make 15% a year, people will swim through shark-infested waters to give you their money. You will not be a financial advisor bringing in capital from somebody with $50,000. You are going to be a star, and you're going to be written up in the New York Times and the Wall Street Journal. You're beating the market. You are doing something wonderful. And if you can keep doing it and do it with other people's money, you're going to join guys like Buffett in being famous, right? So having these guys tell you they can beat the market, it's utter nonsense. All right, lie number 4. Asset allocation will help you reach your goals. Well, asset allocation is what a CEO does, right? A CEO is making a decision with the amount of money that they have in their company about where to put it. Should I grow the company with this capital? Should I give it back to investors? who own the company in terms of a dividend or buybacks in the company, right? Should I pay off debt? That's what asset allocation is, right? So asset allocation is really interesting. It actually will help you reach your goals, but only if your goals are modest and you're making lots of money that you can put away, then yeah, asset allocation will help you get there. But for most of you, you're not making enough money. You may be making enough money, but you're spending it all on things you need to spend it on. You have to spend it on your kids, their education, right? You got to have a house, you got to have a car. Those are getting more expensive all the time. You got to be in the neighborhood you're comfortable in, so there's not a lot of crime. Those all cost a lot of money. So the trick is, for most of us, very difficult to just spread money around. You need it to get through life. And so it's a kind of a paradox. It's like those people who have enough money to asset allocate, to put some on bonds and to put some in stocks and to put some in real estate, those people are typically making a load of money. And those happen to be the same people that the financial advisors who are actually pretty good would love to have as a client. And that's not you, most of you. That's, you're like me. I'm out there making $4,000 a year. I'm really not pretty much, somebody's idea of a client as an asset for asset allocation. It's like, yeah, I'm going to asset allocation my $4,000 a year. I'm asset allocating it into food. So you got to realize that if you're not making a lot of money, then asset allocation is going to reduce your returns. You're going to have money going into things that don't produce much return, like gold or like bonds, and it's just going to make it harder to hit your goals. So what we want to do is, recognize that asset allocation is great for rich people who just want to have low risk and don't want to avoid the ups and downs of the market, and they're going to get where they want to go or they're already there. It isn't for you and me. When we're starting out, we don't have money and we need to get high returns in order to get enough money where we can be financially independent. So don't listen to these things. The time to act is almost never right now. You really can beat the market. They really don't beat the market. And forget about asset allocation. If you're a little guy with not a lot of money, you're going to focus on one thing, growing businesses with your capital. And that is going to be the best way for you to get to where you want to go. All right, now I'd love to hear from you guys. Have you ever worked with a financial advisor? Bet most of you haven't. And if so, does any of this advice sound at all familiar? So leave a comment below with your answer and I'll be sure and follow up with you. And thanks for watching. Now go play. Hey guys, if you enjoyed this video and you feel it was valuable in teaching you more about financial advisors and the kind of things they say, hit the like button and please share this video with your friends. And if you want more investing content, hey, subscribe to my channel. We got a lot there. And don't forget to click the button on the screen for a free gift. So thanks again for watching.